Ever wish you had like a financial crystal ball?
Ah, right.
Well, today we're diving into a report that might just be the next best thing.
Oh, tell me more.
It's from SOS Fin. Well, and they've really broken down this uh, ICICI Prudential Equity and Debt Fund.
I see. Trying to help investors figure out if it's, right for them.
Exactly. And what's great is that SOS Fin, well, they're all about making financial wellness like accessible.
Yeah, they do a great job of simplifying things.
So let's jump in. First things first, we got to talk about ICICI Prudential Asset Management Company.
The folks behind the fund.
Yep, they're kind of a big deal in India.
Big how?
They manage a massive, get this, 14,145.89 crore.
Whoa. Okay, so they're definitely a major player. What does that tell us?
I mean, that's billions of dollars in assets. It shows they have a ton of investor trust and can really influence the market.
Makes sense.
Now, this particular fund, the ICICI Prudential Equity and Debt Fund, it's called an aggressive hybrid fund, which might sound a little intimidating.
Yeah, can you break that down for us?
Basically, it's about finding balance. You're aiming for growth, but also managing risk.
I see. A bit of both worlds.
Exactly. So with this fund, roughly 65% goes into equities, which are like stocks, and 35% goes into more stable stuff like bonds.
So it's like you get the thrill of the stock market, but with a safety net.
Exactly. And that's why it might appeal to someone who wants better returns than, say, just bonds, but they're not ready to go all in on the stock market roller coaster.
Makes sense. Finding that balance is key.
All right, so speaking of returns, this report highlights a one-year return of 35.88% for this fund. What jumps out at you when you see a number like that?
Well, 35.88% is definitely nothing to sneeze at, especially in just 1 year. But, we always got to remember, past performance doesn't guarantee future returns.
For sure, for sure. It's not like a crystal ball or anything.
Right, exactly.
But it does give us some insight, right?
Absolutely. It tells us how the fund's performed, at least recently.
Okay, so we should celebrate the wins, but like you said, not get too carried away.
Exactly. Got to be realistic.
And speaking of being realistic, we have to talk about risk.
Always a factor.
The report mentions a Sharpe ratio of 0.98. Can you break that down for us? What does that even mean?
Okay, so think of the Sharpe ratio like, how can I put it? Imagine it's measuring how well a fund manages risk to make those returns.
Okay, so a higher Sharpe ratio is better?
Generally, yeah. It usually means better risk-adjusted performance.
So is 0.98 good?
It suggests the fund has had decent returns compared to its volatility, so it's not bad.
Okay, so how would that compare to something super conservative? Would that Sharpe ratio be way lower?
Most likely, yeah, because those investments are built for less volatility, even if it means slightly lower returns.
Interesting. So it's all about finding the right balance for you.
Exactly.
All right, so we've talked about performance, we've talked about risk. Let's talk about who's actually calling the shots here.
The people behind the curtain.
Right. So who's managing this fund?
Well, according to the report, is Mr. Sankar Naran. He's got over 21 years of experience in the investment world.
Wow, over 2 decades. That's a lot of experience.
Yeah, he's seen a lot of market ups and downs, that's for sure.
So that experience must be valuable, especially in such a crazy field, right?
Oh, absolutely. Finance, as you said, can be wild, having that experience of navigating different market cycles. That's huge. He's probably learned a ton along the way.
It definitely gives you some peace of mind.
For sure.
Okay.
Right.
But that kind of expertise doesn't come free, right?
Right. There are always costs involved in managing a fund.
The report mentions an expense ratio of 1.42%.
Yeah.
Can you tell us what that is exactly?
Yeah, so that 1.42% covers things like the fund manager's salary,
Makes sense.
administrative fees, marketing, stuff like that.
So it's kind of like a management fee.
Exactly.
That high.
It's actually pretty average for similar types of funds.
Okay, so not a steal, but not a red flag either.
Precisely.
Good to know. So we've covered who's managing the money, what it costs. Now let's look into what this fund is actually made of.
Getting into the nuts and bolts, right?
Right. So what kind of stuff does this fund invest in?
Well, it looks like a pretty diverse portfolio, actually, focusing on some big sectors in India.
Like what?
They've got investments in private banks, pharmaceuticals, even power generation.
Okay, so a good mix. Are there any specific companies in those sectors that our listeners might recognize?
Yeah, for sure. It's always interesting to see where the money's actually going.
Right, gives you a better picture.
So they've got holdings in companies like ICICI Bank.
Oh yeah, big player.
Exactly. And NTPC Limited, they're huge in power generation.
Solid companies, for sure. Well-established, definitely a significant presence in their industries.
It seems like they're aiming for a pretty diversified portfolio, which that's usually a good sign, right?
Oh, absolutely.
Yeah.
Spreading those investments across different sectors, smart move for managing risk.
Right. So if one sector takes a hit, it doesn't tank the whole portfolio.
Yep. Okay, so we've talked about their picks, but let's get into some of the finer details. The report mentions something called exit loads. Can you explain what that is?
Yeah. So an exit load is basically a fee, if you withdraw your investment too early.
Too early meaning?
In this case, if you pull your money out within a year, you'd have to pay a 1% exit load. It's there to discourage people from constantly jumping in and out of the fund.
So encouraging a more long-term approach.
Exactly.
Makes sense. And speaking of the long term, what about taxes? Nobody wants any surprises there.
Right. So if you cash out within a year, those profits are seen as short-term capital gains and are taxed at the current 15% rate here in India.
Okay, and if you hold on longer?
Then you're looking at long-term capital gains, which are taxed at a lower rate, 10% for anything over 1 lakh.
Ah, so patience can actually save you some money.
It can.
Good to know. Now, the report also mentions that this fund could be good for NRIs, but there are a couple of extra things they need to keep in mind.
Yeah. Currency exchange rates are a big one. That can really impact your returns when you eventually convert the money back.
Makes sense. What else?
And of course, their home country might have totally different tax rules than India.
Right, right. So maybe talking to a financial advisor would be a good idea, huh?
Always a good idea, especially with international investments. It can get tricky.
Totally. So we've covered a lot about this fund today. We've looked at the performance, the risk, who's managing it, what it invests in. Based on all of that, SOS Finwell is saying this fund is a good fit for investors who have a moderate to high risk tolerance and a longer investment horizon, at least 3 years. Would you agree with that assessment?
Yeah, I think they're spot on. This isn't some get-rich-quick scheme, It's for those who are okay with a little risk and are willing to be patient for those potential rewards.
It's all about finding the right investment for your goals. So would you say there's anyone this fund might not be a good fit for?
Definitely. If someone's really risk-averse or looking for quick returns, this isn't it. This fund can be a bit volatile, and those exit loads make short-term plays pretty impractical.
So not a parking spot for a couple of months worth of savings.
Exactly. This one takes a bit more commitment, a willingness to ride out any market ups and downs.
And really understand what you're investing in, not just chasing the highest numbers.
Exactly.
Well, this has been super insightful. I feel like we've really unpacked a lot today.
Oh, definitely have.
I always say that knowledge is power, especially when it comes to your money.
Absolutely.
So if anyone wants to dive deeper into this fund or check out other reports from SOS FinAm, well, where can they go?
Their website's a great resource.
Ah.
Tons of information there. Plus, they've got a team of financial advisors if you want that personal touch.
Awesome.
Yeah.
And there you have it, folks. Another deep dive in the books. Remember, investing doesn't have to be a mystery. With a little research and maybe some expert guidance, you can make your money work hard for you.
Couldn't have said it better myself.
That's all the time we have for today. Thanks for joining us, and we'll catch you on the next deep dive.